Hey everyone, welcome back to Corporate Decoder. Today Crisp Momentum Incorporated just filed a Form 8, and I'm seeing a surprising move that hints at a bigger plan. Quick note, this is not financial advice, just my take on public filings for educational purposes. This report details a significant debt restructuring and share buyback, which could reshape the company's financial future. Alright, let's get right into it. The date we're looking at is the 22nd of July, 2026. This is when Crisp Momentum Incorporated, or CRISP as it is sometimes known, officially made a move. This filing is a current report, meaning it tells us about major events that are happening right now and that investors need to know about immediately. Scroll Crisp Momentum Inc. Exact name of registrant as specified in its charters. Scroll the company in question is Crisp Momentum Incorporated. You might know them as CRISP. They are primarily involved in the communication services sector, specifically entertainment, though their financials lately have been a bit of a roller coaster. First, a quick bit of background. Like many companies, Crisp Momentum Incorporated is incorporated in Delaware, a common practice for businesses. They have a commission file number of 000-24,520. This is just a unique identifier for them with the Securities and Exchange Commission, or SEC, and their IRS Employer Identification Number, or ININ, is 04-3,021,770. This is essentially their tax ID. Their listed address is 250 Park Avenue, NU, 7th floor, New York, 10,177. This is their principal executive office, and their main phone number is listed as 305-351-9195. Now, let's get to the heart of the filing. Item 1.01 tells us about a significant agreement the company entered into. On the 22nd of July 2026, Crisp Momentum Inc., which we'll just call the company, signed a really interesting deal called a loan assignment and share repurchase agreement. This agreement is with a company named Partum Ag. To understand this new agreement, we need to rewind a bit. Back on the 13th of November 2025, the company had lent money to another company called Nexvers Company Limited, or Nexvers. This loan was supposed to be up to $3 million, and they had already advanced $1.7 million of that amount. Nexvers had paid back $200,000 of that loan. So, at the time of this new filing, Nexvers still owed Crisp Momentum Incorporated $1.5 million plus some interest. These are what they call the outstanding loan obligations. Now, back to the 22nd of July agreement. Under this deal, Crisp Momentum Incorporated essentially turned over all its rights to that outstanding loan with Nexvers to Partum Ag. Think of it like selling off the debt. Partum Ag would then become the sole lender to Nexvers. Here is where it gets really interesting. Before this deal, Partum Ag actually owned 20 million shares of Crisp Momentum Incorporated's own stock. In exchange for taking on that $1.5 million loan from Nexvers, Partum Ag agreed to give those 20 million shares back to Crisp Momentum Incorporated. This just means the agreement has all the standard legal assurances and promises you'd expect in a deal like this. Nothing too unusual here. So, the deal officially closed on the 22nd of July 2026. Partum AG handed over those 20 million shares, and Crisp Momentum Incorporated took them. This is just a legal statement saying that what is described here is a summary, and the full details are in an attached document, Exhibit 10.1. Moving on, Item 9.01 covers financial statements and exhibits. Scroll Exhibit Number Description. Scroll this section lists the important documents attached to this report. Scroll 10.1 Loan Assignment and Share Repurchase Agreement, dated as of the 22nd of July 2026, by and between the registrant and Partum Ag. Scroll Exhibit 10.1 is the actual loan assignment and share repurchase agreement itself between Crisp Momentum and Partum Ag. This is where all the precise terms and conditions are laid out. Scroll 104 Cover Page Interactive Data File, embedded within the inline XBRL document. Scroll Exhibit 104 is the cover page of an interactive data file, which is common for SEC filings nowadays. And finally, we have the Signatures section. This is the standard legal formality confirming that the company is officially submitting this report. Scroll Crisp Momentum Inc. date, the 23rd of July 2026 by Fuarifu Anarita Kolho name. Anarita Kolho title, Interim Chief Executive Officer. Scroll the report is signed by Anarita Kolho, who is the Interim Chief Executive Officer on the 23rd of July 2026. So what does this all mean? Crisp Momentum Incorporated essentially traded away a $1.5 million loan receivable for 20 million shares of its own stock. This is a share repurchase, but it is being done through a rather complex debt for equity swap. Why would they do this? Well, with their market cap sitting around $49 million and the stock trading at just $0.03, repurchasing 20 million shares could have a significant impact. At $0.03 per share, that is about $600,000 worth of stock they are effectively buying back. This is a fraction of the $1.5 million loan they gave up, which seems like a bad trade on the surface. However, the company has been struggling with a net loss of $4.56 million in Q1 2026, and their stock price has been very low. Buying back shares, especially from a single entity like Partum Ag in this manner, can sometimes be a way to reduce the number of outstanding shares, which in theory can boost earnings per share and potentially the stock price. It also signals that management believes the stock is undervalued. Given the company's recent news, including a director disclosing zero share ownership and the appointment of an interim CEO, this move comes at a critical juncture. It suggests a potential pivot or a strategy to consolidate ownership and financial obligations. The key question is whether this will be enough to turn things around, or if it is a sign of deeper financial distress. This deal effectively cleans up the balance sheet by removing a loan asset and reducing the share count, but at the cost of the $1.5 million debt owed to them. It is a high-stakes maneuver for a company trying to regain its footing. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like this video, subscribe, and join our Discord community in the description.